All right, welcome back, guys. Welcome back to the show. It might be a little bit nosy, but excuse all of that. This is very important. I wanted to talk about this, right? This is really hilarious, right? So, if I told you the banks want all your Bitcoin and all your top-notch cryptocurrency, how would you feel about that? You'd probably be like, "That's nonsense. What are you talking about? How can the banks take my crypto?" Those who are not initiated, right, and there is an initiation process, by the way. You've got to join a cult. I'm joking, guys. There are two types of people in crypto. One type is people who believe in decentralization and make sure they hold on to their funds in their own wallet. And then there's another type who I'd like to say uninitiated, even though there is no initiation process, right? That type are curious or have fallen for the hype or whatnot, right? Just want to make money. That particular type usually end up buying crypto in centralized locations and storing it on centralized locations. So banks in 2021 and 2020, actually, since then, 2020 to 2021, banks have realized that they can partner up with institutional grade custody services for crypto. So one of those companies is, for example, NYDIG is a custody service providing cryptocurrency service to the banking sector, right? So they've come up with a solution, they've created software so that banks can now offer cryptocurrency to their clients, right? To their people who bank with them, basically. And it's a simple line of code. So you just integrate this code, boom, voila, you have the opportunity to buy, hold, sell crypto in your bank. You don't need an exchange. So what they're trying to do is take away as many exchanges as possible, number one, so you don't need an exchange. I mean, why would you need an exchange if you have the ability to buy, sell in your bank? And the bank sees exactly how much money you have, the government sees exactly how much money you have, everybody sees how much profits you made, everything, right? So it's a great solution for the uninitiated. Now, why do I keep on saying uninitiated? A lot of the people have not been initiated into the point where banks have the power to freeze your funds. So if for whatever reason the bank decides to freeze your funds, to freeze your crypto, that's your entire account frozen. What are you going to do? The very thing we're trying to protect ourselves, right, from, which is inflation, control over us, our freedom, and the banks, dictating what we can and can't do. We're literally falling into that same trap, right? This is everything goes against that. So that's the initiation. They're making it so easy for you, so simple for you, that you want to get in and dabble yourself into crypto. And believe me, the volume matters, because more and more people will do this. Because literally, if you look at the planet right now, there's just over 8 billion people, and according to some statistics, right, 6 billion people actually have a bank. 6 billion people have a bank. So the mass adoption we want to see in crypto can happen overnight, just like that, right? Of course, it's not going to happen with big money. It's going to happen with small money, but the volume is so high, the adoption just spikes, right? So we, from having 100 million people trading in crypto, for example, going to 6 billion, that's massive. That is absolutely massive. That's like I don't know what to say. That's like a 600,000% increase in people using it, right? So it gets really like, the adoption is just insanity, right? But that creates a massive problem for the cryptocurrency space. So what happens is a lot of the banks may or may not, and I'm assuming will actually mostly be buying crypto, or at least getting it from a custody service, right? So maybe still a little bit of a code. And as long as it's verified that that is the accurate amount, they can actually now hold cryptocurrency, especially BTC and Ethereum, on behalf of you, we may just be falling into a trap. Now, if majority of the crypto, if more than 50% of the crypto go to these people, then we have a problem, because they now have the power to pump and dump. We've literally given them the power to manipulate cryptocurrency markets, if that makes any sense. So imagine they now sell, imagine today some user buys $100 worth or £100 worth of Bitcoin, and the bank decides to, because they own it, so they decide to dump 50% of whatever you got, bring the price down, and you decide to exit. Well, they're not obliged to give you $100 or £100 worth back, because now the price is what they're going to give you, which could be 50. So you could easily lose value sitting in there. But of course, one of the biggest fundamental things that we're forgetting is banks, how they work, right? Bank works on a debt-based system. So bank requires a certain amount of money to be held as deposit, so that they may go and borrow against that. Now, if you have, say for example, 1 million people with say $1 million worth of BTC sitting in an account, well, you've given them a power to go and get at least 10 times that, if not more, right? So they can now go and get, according to the old statistics, they can go and borrow $9 million more. So they've just generated $9 million, and you've created that, because remember, every dollar you put in or every pound you put in, they make 10. And now you've given them that same dollar that they've already made 10. You've given them crypto, and now they're going to borrow against that. Well, guess what? It's a double whammy, right? It's unbelievable. Look, this is just my theory, right? But it's insanity. But I am seeing this now. The reason I'm saying this is because, look, I've had an account a couple of years ago. Actually, I got rid of it. So I didn't get rid of it. They kicked me off the system because they were not happy me buying and selling crypto. They were not happy. They didn't want me to deal with crypto. In order to protect me, they said, right, well, sorry, you can't bank with us. That's how stupid and silly it was. And at that very same time, they themselves were offering cryptocurrency. And the particular bank I'm talking about is Revolut, right? Revolut was offering cryptocurrencies. Now, when they shut down my account, I had a few pounds worth of money in there. That I'm not bothered about. But I had BTC in there because I did buy some to test it out, how it works, if I can transfer it out. They didn't give me that. They didn't give me my fiat, and they didn't give me my crypto, right? So that just says to me, that they have the power to literally take your funds off you, and there's nothing you can do about that. So I'm glad I tested it, and I'm glad I left, right? Of course, nowadays people are saying that they can move it and XYZ, but ultimately that's not what I'm talking about. Whether you can do it or not, it doesn't matter. That's not relevant. What matters is, do they have the power to seize your funds? Do they have the power to put a block on you? Do they have the power to kick you off the bank, to say that, oh, we're trying, in order to protect you, we're just getting rid of you? So they keep your money, right? So this is the kind of situation that I'm seeing, and I'm like, wow. We are, a lot of people are falling into this trap, because people get really excited. It's like, bro, those exchanges you were talking about, like FTX and this and that and whatnot. And I did say I'm not going to talk about FTX, and I'm not talking about it. I'm just giving you an example. Well, these exchanges, they could go down, right? They could go down and take everyone users' funds and everything. Yeah, I mean, what if the next biggest cryptocurrency exchange flops? Oh, users are going to lose all their funds. Yeah, absolutely. Well, now my bank does it, so I don't really have to go to an exchange, do I? And I'm getting a good rate. Sometimes I'm getting 0 fees. I worked it out. I'm getting some really, really serious deals. Yeah, you're getting all of that. That's the whole idea. The whole idea is to make it easy. So easy that you do not think twice of opening anything up, because you have to trust your bank. They want you to trust, your bank wants you to trust them, because you're already trusting them with their money, you're trusting them with your mortgage, you're trusting them for everything, your credit card, your loans, whatnot. Why wouldn't you trust them with your crypto? Right? Makes sense. So that's what they want you to do. They want you to go and trust them with your crypto as well. but you're falling into a trap, because the trap is that you trust them, and then what they do is they end up having the power to do whatever they want with your funds. And also, if people thought the fractional lending or the fractional reserve system was bad, well, guess what, you're about to 2x that fractional lending, if you understand my drift, if you understand what I just said to you. So for those of you who are not initiated, right, the initiation I'm talking about in the crypto sphere is understand that your crypto is an asset. It's technically not, obviously it's not physical, but think of it like a piece of land or a piece of property that you own digitally, that you can only buy and sell, that you can, do whatever you want with it. That's your property. You shouldn't be leaving that property. If you want to protect yourself, and if you want to protect the current financial system, or even the future financial system, or your financial livelihood, what you need to understand is, if you can't move your cryptocurrency from whatever platform you bought it, it's a scam. All right? The other reason I'm saying it's a scam is because, think about it this way. You do not have to have any money in your bank, right? Or your banks don't have to have money. They can literally just move funds and make money appear in your account with the touch of a button, right? So they can plus whatever numbers they want. That's how the money system works. So they can easily plus some money in your account if they choose to. And there have been cases where they have actually done this exact same thing, where they've added funds to institutional grade accounts. That's how it works, right? Selling, when the government sells bonds and then there's money generated from nowhere, it's literally a press of a button, because a bond is nothing anyway. It's a debt of a debt. It's just crazy anyway. That's mind-boggling stuff, right? But that's what it is. Well, what if now hundreds of banks across the globe decide to sell you crypto, but they understand that the probability of you withdrawing that crypto, just like banks, the probability of you withdrawing all your money at the same time, everybody doing it at the same time, is so low that they can offer you and say you can withdraw your money at any time, because they know that everybody that holds an account is not going to do it at the same time. And what if they do the same thing with your crypto and say, well, you can store and you can move your funds, but actually it's not legit crypto. It's not even crypto. It's just a bunch of numbers showing up as BTC or Ethereum or whatever value you pay, and it tracks it and it gives you the price. So you are able to see the price, but it's actually not there. Now you got a problem, because that means that if everybody decides to take their BTC out like a bank run, well, then you got a situation, because there isn't enough BTC for it to go out. And also they can inflate the amount of BTC actually available. So if they hold 10 BTC, for example, with their digital system, they can make it into 100 BTC, 1,000 BTC, add as many zeros as they want at the end, and there's absolutely nobody out there to control it. So that is something that I would, really, really look into. And also, but people have to get in and control. I'm not sure how regulators are going to work with this, but if banks are offering cryptocurrencies, it should be one-to-one backed. If they are using a custody service, then it also should be one-to-one backed. Nobody can ever buy more than what's available, because then it just breaks the system or breaks the psychology. Because one of the things is the system itself is intact, right? Bitcoin, we know, is a finite amount of currency available. The last coin of the 21 millionth coin is going to come out in 2140. We know that that's finite, right? That's finalized. It's in the code. It's hard coded in the code. There is no changing that. But that doesn't mean the banks can't create 210 million Bitcoin. Does that make sense, right? Because they don't have anything. They don't physically hold anything. They're just showing a digital number in your account. And that worries me. That really worries me. So I want to see how regulation and how everything else comes along, and what they do to protect everyone from this kind of a scam, a potential scam that could possibly happen. So yeah, I just wanted to kind of talk about this, because I thought about it, I was like, there's a lot of people. I mean, I've had people asking me, actually, this is the other reason as well. Somebody came and asked me, they're like, is it safe to actually put money into my bank or buy it through the bank? And I was like, well, that's exactly what they want you to think. because isn't it safe to leave money in your bank instead of at your home, because it could get robbed. Physical money could get robbed and you have no way of getting it back, but digital money gives you that level of safety. But you're giving them money so they can make more money. That's how the digital system works. So are you falling into that trap? It depends on what kind of an investor you are, or what kind of a person you are. Which category do you belong to, right? Do you want to protect yourself? Because if you want to protect yourself, you shouldn't be doing it in the bank, right? But if you're just there to dabble a little bit and you want to go into this, then yeah, you're falling into the trap. You know, for me, whether it's $10, $100, $1,000, pound, whatever you want to call it, my crypto needs to stay in my own personal wallet because it's my crypto. There's no other ifs and buts about that. What's the time right now? There's no ifs and buts about that. Sorry guys, I'm just feeling hungry, so I'm like, what's the time now? I'm gonna pop over to McDonald's and go and get something. Not promoting McDonald's, they don't pay me. But no, so that's the situation. It's like, that's how I see it. Yeah, pretty crazy, pretty crazy. And I'm just worried, like, you know, there could be, so all the FUD that we've had with all these, you know, exchange and whatnot, and some protocols failing and whatnot, they don't worry me as much, believe me. You know, crypto is a new asset class. It's still being discovered, right? So the discovery that I'm going to say is, like, for example, there's a lot of things we need to mature in the market. There will be protocol level regulations that we have, right? And that's a really good thing, by the way. I'm not talking about your corporate level regulation, which is just designed to favor a few and punish the rest, right? Which is designed to only take from one side and filter up the system. It's the worst one, right? So that's your traditional regulation. I'm not interested in that, right? But protocol level regulation means that we can create statements that if this then that, right? Very simple. You know, that's easy, very simple. You know, we make sure we can on a protocol level we can control bad actors. If a bad actor has been identified via the protocol, has done something, then we can automatically stop that bad actor from doing this. In this way we will create a more healthier space where bad actors would think twice before, sorry, one second. Bad actors would think twice before they go and do something, right? And hopefully it should eliminate bad actors, unless someone's doing it on purpose in order to harm. Then we already know that, okay, this was done on purpose, because that's what it does. It eliminates bad actors. You know, and if people start using the banking system for buying crypto, well, in my opinion, that's traditional regulations and you're falling into the trap, and there's a lot of bad actors that you wouldn't even have any idea about. Remember, in the corporate level, the left doesn't know what the right knows. Okay, it's very simple. One hand doesn't know what the other hand knows. In cryptocurrency, in decentralized way, everybody knows what everybody has, right? We're open source, we're open ledger system. So yes, of course, we all have our identity hidden to a certain point, right? But other than that, your wallet, your balances, everything is transparent, and that's what I would love to see. I would love to see if centralized banks are sending out funds and whatnot, or you know, allowing people to buy and sell. I want to see it being transparent on the blockchain. I want to see it being confirmed. So that's what I'm talking: protocol level transparency, protocol level regulation, in order to control any kind of a manipulation or any kind of a fake information that we might actually get. So yeah, definitely love to see that. I want to see how that works, right, and what NIDIG is doing about that. We can go on about it, but that's what I'm seeing. So that should be pretty interesting. Sorry guys, I need a puff. Right. So yeah, protocol level. But yeah, that's what I'm seeing, guys. That's what I'm seeing. I'm going to do I'll probably do a nice little live tomorrow. Today I just wanted to talk about this because there are risks. Look, there are benefits and there are risks, right? Benefits is when you think everything is given to you or is made easy for you, for your benefit. It's misleading, all right? Nothing is made easy for you. Nobody creates anything easy for you. They create it easy for themselves, right? Especially when institutions do it, they have vested interest to make it as easy for them. And usually what I mean by institutions being interested in finance and they make something easy, they're making it easy for them to make even more money. That's the whole idea with ease of use. You know, how quickly can they accumulate more money? How much money can they get pumped in? That's how it works, right? That's how the system works. So yeah, I mean, that's what I see. But yes, cryptocurrency also needs to be easy. I think there's a lot of upgrades that need to happen to the architecture, especially the user experience on cryptocurrency, and I think it could be made more simple. The technology is there, it's a matter of implementing it in a safe way. Sadly, we have too many distractions in order for anybody to do anything in the market, right? So let's give you a good example. We have so many different protocols, 21,000 plus, like, you know, copycats of a copycat of a copycat, right? But the point is so many of these protocols, they raise funds and they're all trying to do something different. And I say, well, why can't you all raise funds and do the same thing and fix the problem? Create one thing that solves the problem for everybody, right? Why can't all of these super awesome teams come together and create a system which benefits humanity, right? Which makes a user experience very simple, interfaces very simple, interoperability very simple, easy for everyone. Think about that, right? We've raised billions and billions and billions of dollars in projects, right? That everyone likes. We've had these massive ICOs, IDOs, you name it, every level, right? We've even had an IPO with Coinbase, right? But the point is we've done this. We've raised billions and billions and billions, hundreds of billions of dollars. And yet we have not all come together and made cryptocurrency easy and accessible for the masses. Does that make sense? So I think if everyone comes together and does something, we could literally create the bank on the blockchain, because that's what I've always talked about. I personally, if I had the funds, if I had the money, if I had the backing, if I had the team, I would, and I am still thinking about it, if I can get everybody together, of building a bank on the blockchain, a bank that doesn't require fiat. It doesn't require fiat. Maybe to initialize it, we may have some fiat as a reserve, but we don't really require fiat. We can actually operate a bank on the blockchain with a whole different level. I mean, imagine having it's not going to be technically, it's not going to be one-to-one back, but imagine you have collateral, right? You have a reserve. Your reserve is in Bitcoin, Ethereum, or whatever top currencies, right? You choose a basket of currencies. That's your reserve. And that then initiates a bank level coin. So similar to a CBDC, but without the C in it. So it would be a digital currency for the bank. It was a bank digital currency, a BDC. But it would be decentralized. So it would be like a DBDC, not a CBDC, right? By keeping it decentralized means that money or funds inside it, or coins or tokens or whatever you want to call it, can be traded in and out. So, you know, if you want to buy crypto, BTC, you can buy crypto, you can buy BTC, and it's self-custody. So whatever you deposit, you receive equivalent of that. When you send it and you want to cash out in BTC or Ethereum, well, you receive the equivalent back in BTC, Ethereum, and it's self-custody, because that way the bank is just the protocol. Think about it like this, right? So even now, BTC is like a protocol, right? The only difference is you can't send something to BTC and receive BTC for it. Does that make sense, right? So it's possible. I think it's absolutely possible. It's how it's going to be done. I mean, someone who's clued on, who heard what I just said now in the last 30 seconds, definitely knows what I'm talking about, because I've done some maths and I've done some kind of research, and I was like, hold on, if this thing does this, And can't we do this with this particular thing? Because the protocols are available, people have done massive research on it, just no one ever came down together and do it, because everyone's got their self-interest. This is the problem. Every project has self-interest. It's like, oh, you know, how can we get rich, right? Because some of these guys, remember, they come out from nowhere, they have nothing, and then they come in, they create a protocol, they create a hype, they get picked up by one of these hedge funds or whatever, usually are scammers anyway, and they pump the market the life out of it, and make billions out of it, right? So that's how it is, you know, these VCs and whatnot, they make billions out of it, and they all get rich, basically. That's the whole idea. It's all get rich quick, right? And people who actually believe in the protocols and believe in what they're building end up being bag holders until seasons come along, and then they could easily cash out. But then it's just filtering down. And that's the biggest problem. That's one of the reasons why I say most cryptocurrencies are just a Ponzi, because you can't really do anything with it, right? They're just promises, nothing else. But yeah, I don't want to go too deep into this. Obviously, I don't want to shit diss anyone or shit anything. Just being myself. But other than that, guys, I'm not gonna make this any longer. I hope this video was informative. I hope I left you something to think about, you know, food for thought, basically, and understand that what is it you want, right? Because ultimately it all matters is what do you want. You know, do you want security or safety, your personal security, your personal safety with your funds, or do you want to trust somebody else to secure that for you and have these entities, or do you trust these entities enough to basically leave it there? That's the whole idea. Because, you know, the situation is we're coming to a point where literally everything is now being handed over to these guys, and they're trying to take control of everything, and I'm not happy with that. So on that note, guys, like, share, subscribe, and I'll catch you on another one very soon. Adios, my amigos.